Hey y'all, it's your favorite YouTube adjuster here, back with some more homeowners insurance tea.
You in the past, I'm in the future. You mad?
Thank you guys so much for clicking on this video. If you're new here, my name is Keila Trishan, and I make videos on lifestyle, womanhood, and mental health. I do lots of vlogs on day in the life in the insurance industry, day in the life with a toddler, all the things. So if that's something that interests you, go on ahead and click that subscribe button below. Be sure to turn on your notifications so you don't miss anything from me. And if you are returning, thank you so much for coming back, and thank you for your support. Okay, so I would not be me if I didn't do any insurance content. You know, I'm here to give y'all all the information, all the tea. Now, the last few videos that I put out, just kind of like on specific things regarding like an insurance policy, have been focused on auto. And I did want to kind of give you guys a video on homeowners as well. Now, I haven't done a homeowners video in a while. It may have been like over a year at this point. So I did kind of want to do like a refresher, tell you guys some things about your homeowner's policy that you may or may not know, and just kind of make it more digestible for those of you like myself who are not just sitting there reading their insurance policies back and forth. So if that's something that interests you, if you had a claim in the past and didn't quite understand some different terminology, or if you are just curious, if you're in the market to buy a home, whatever, go on ahead and stay tuned. Okay, so the first thing that I wanted to discuss is what the homeowner's policy covers. So the homeowner's policy is there to protect you if there is some type of sudden and accidental, like catastrophic event that causes damage to the building materials. Now, it's not a maintenance policy, and this is what people get kind of confused about. So I'm going to give an example that is extremely common. So a lot of times in most insurance companies, the main types of claims that you're going to get are water claims. So it's typically like a pipe burst and, cause a flood of water, or maybe like an overflow of a toilet, something like that. Something that causes like an accidental rush of water that, causes damage to building materials. So in most cases, the damage from the water will be covered, the actual resulting damage, but the damage to the pipe, for example, depending on what the cause was, will not be covered. And a lot of times it's because the pipe wasn't maintained. So typically this will take the diagnosis of a plumber or some type of professional to come out and take a look at the origin of the loss, and loss meaning like the claim. So if something happened like to where the pipe was hit, if something fell on the pipe and that caused it to burst, that's different. That's a sudden accidental event, and in that case, the pipe will most likely be taken care of along with the resulting water damage. But if the pipe burst because it was just old and it wasn't maintained, then typically the resulting water damage will be taken care of because that was a sudden accidental event. But the pipe, the homeowner will be responsible for it because you didn't maintain it. So it's important to just kind of take inventory of the building materials that you have in your home. Plumbing and roofing are kind of like really big hot topics. A lot of times those things last for 20 plus years, but sometimes people, especially if you moved into like a new construction, 20 years flies by and, you're still in the same pipes, you still have the same roof material, but you do need to start thinking about, okay, I need to get it checked. Does it need to be replaced? That kind of thing. Just so if you have a situation, everything can be covered. You don't want to be caught in a situation where there's something that your insurance will not cover because it wasn't maintained properly. So that's what I want to say. So not necessarily being underinsured, you just want to make sure that you're doing the proper maintenance. So if something does happen, all of the damages will be covered. Okay, so the second thing that I want to talk about is the fact that you have the freedom to use your own vendors to get repairs done if you have a covered claim. So the insurance company can help you. So if you have a covered claim and the insurance company has provided you with a check to get those repairs done, you can do the work yourself. If you're handy like that, you can hire your own contractor, you can hire whoever to do the work, or you can go through the insurance company and the insurance company can assist you with a licensed contractor to do the work for you. Now, it's a referral if you choose to go through the insurance company. So it's not like they are our contractors. They're simply a contractor that works with us. So you will still have to work with the contractor directly for your repairs because it is your home. The insurance company's main job is to pay you enough money to make sure that those repairs get done. So some people think that they have to go through the insurance company for repairs, or they think that it's the insurance company's responsibility to fix the home. And it's your job to fix your home, but you do have the freedom, to choose how you want that to be done. So what I can say is if you go with the insurance companies, contractors, a lot of times, like if there is an issue that comes up with the contractor, you can still contact your adjuster to kind of be that middleman and, just to make sure that things are being done to standard. You do still have that. We would owe you that as an insurance company. But if you're using your own contractor, your own, people to do the work, your insurance company really doesn't have any say-so over what they do. Really, the only time that there would be an issue is if there's a difference in like the estimate price, which I'll talk about a little bit later. But it will be your responsibility to get your home fixed or not. Because some people get their settlement and don't do the repairs, or they don't think it's serious enough to do the repairs. But the issue with that, though, is that if you come back later on with the same damage and, the insurance company has paid you and you haven't gotten those damages fixed, that'll kind of bite you in the behind later. But we're not talking about that right now. What we're talking about is just like the contractor. So you are able to use whoever you want. You don't have to feel obligated to use the insurance company's vendors or anything like that. You can use your own vendors. You can do it on your own. But there are like some perks to using the insurance company's people. But there could also be perks to using your own people if you can get the work done cheaper or, whatever. If you fix your home however you want to fix it, the insurance company's job is just to make sure that you have enough money to do it to standard. Okay, so the third thing I wanted to talk about is the estimates that are prepared. So I've talked about this in like auto videos as well, but there is kind of a misconception, and I understand where the misconception comes from, just because of like past events, but a lot of people think that the insurance company is intentionally trying to lowball them and like won't give them enough money to, fix their home. So I just want to kind of put your mind at ease and let you guys know how the estimates are created. So typically there is a program that is used within the insurance company to write the estimates, and it's essentially like a build back. So an inspection is done on your home to see what the damages are, and your adjuster, or the person that comes out to take a look at that damages, will put together an estimate to build back your home to put you back to what you were prior to the loss. So the idea is to bring you back pre-loss condition. So you're not supposed to gain from it, but we also can't pay you less than what your materials are worth. So let's just say carpet. If you had basic run-of-the-mill carpet, the insurance company is not going to pay you money to put back, a better grade of carpet. The insurance company is going to pay you money to put back a basic grade of carpet. Now, if you choose to go and get a better grade of carpet, then you would just have to pay the difference. On the flip side of that, if you had top-of-the-line carpet, the insurance company's job is to pay you to replace that top-of-the-line carpet. So it's supposed to be like an exact, basically we owe you for like, kind, and quality. You'll hear that term a lot, like, kind, and quality. Okay, so if there's a situation where you disagree with the estimate, which happens all the time, usually it takes proof, not just you coming to your adjuster saying, hey, this isn't enough money. Because the first thing your adjuster's going to ask you, I know I'm going to ask you, is okay, how do you know? Do you have an estimate that is, different than mine? Like, do you have different price on materials? If you do have different prices, or if your contractor's telling you that it's going to be more, then you just need to present that information to your adjusters so they can take a look at both items and see if they missed anything, or if there are discrepancies that we wouldn't be able to pay for. So that happens a lot, where somebody might just simply be trying to put in better materials, and that's okay. You build your home back however you want to build it. It's just that the insurance company will not pay for that. So that's why we ask for the proof. Like, we need to see, okay, cool, what are you replacing it with? Is this like kind of quality? If it is, and we paid you too low, we'll up it, and pay you what it would be to put it back. Are you just going with a crazy expensive contractor? If so, completely up to you, but the insurance company doesn't necessarily owe you for that. They owe you what it will cost to get the job done. So just kind of keep that in mind, but typically most of these situations are handled with the adjuster, and we're able to come to an agreement pretty quickly. Okay, so the next thing I wanted to talk about is specific to California policies. If you are in a different state, I would suggest reaching out to your insurance company, and they can kind of give you more information on this. But in California, we're known for earthquakes, and so earthquakes are specifically excluded on the homeowner's policy. If you have any type of earthquake damage, you are going to want to go through what's called the CEA. I believe that stands for California Earthquake Authority. I will find out for sure and I will put it on the screen. But it will be a separate insurance outside of your regular homeowner's policy to cover any earthquake damages. Now, my understanding too is that the deductibles for this insurance are a lot more expensive than it would be like just on your regular policy. And the reason being is because if there is a widespread earthquake, if there is widespread damage, think the 1994 earthquake, that earthquake put a lot of insurance companies kind of out of business just because they didn't have the funds to cover like all these damages. So to remedy that, there's a separate pool for those type of claims, and you just want to be cognizant of that. Not everybody has that insurance, but if you are planning to buy a home, or even if you do have a home, I do feel like it's something that you should take into consideration, because even though the deductible is much higher, it's still going to be less than what it would be if, you know, God forbid, you had like a major disaster and your home was destroyed. So definitely something that you want to consider, especially if you live in the state of California. It's one of those insurances, I would say, I see that kind of like 50% of people may have it, 50% of people don't. But it is something to consider if you live in a place that is prone to earthquakes. Similar to places that are prone to floods. Like some places will have like some type of outside like flood insurance, or maybe like hurricane, you know, type insurance, things like that. Again, don't quote me on those things. I don't live in I don't live in a place that has those type of natural disasters, but I do live in a place that has earthquakes. So if you live in California and you are thinking about buying a home or some type of property, that is an insurance that you may want to consider, and like just do your research on and see if it works for you and your budget. Okay, so speaking of deductibles, that's the last thing I want to talk about. So depending on what your deductible is, if the estimate is less than that deductible, then you will not get a payout. This goes without saying, but I've had some people fight me on it, and I just want to put it out there. So if your deductible is $1,000 and an adjuster comes out to take a look at the damages, or even if they do it virtually, a lot of insurance companies do have the ability to kind of look at the damages virtually, especially with everything that's going on. And, you know, some people just don't want folks in their home. But if they put together an estimate to build back your home to pre-loss condition, and it ends up being less than that $1,000 deductible, let's say it's $900, there's nothing for the insurance company to pay, because the agreement in the policy says that you cover the first $1,000, and then your insurance company will cover whatever's over that up to whatever your policy limit is. So in that situation, you would get a copy of your estimate so you can see like kind of what all needs to be done. You can provide that to a contractor. You can get the materials yourself. Same thing as before. You can do it however you want to do it, but you will be responsible for paying those out of pocket up front to get whatever done. Now, if, you know, going through the repairs, whatever, it's determined that it's actually going to be a little bit more, so then it will be over deductible. Not a big deal. Just present the new information to your adjuster, and then they can go back and work on your file and see if any additional money is owed. So yeah, if you have damages that are small, a lot of people too like won't even call the damages in if it's like really small. So like you see sometimes where people will have like a hole in their drywall or something from like a door hitting it, or just something like really minor, something they can patch up. Sometimes they won't even call the insurance company just so they don't have to worry about a deductible or even a claim. But if you do, not a big deal, but you will just get what's called like an under deductible estimate, and then your claim will be closed out. All right, you guys, so that is all that I have for you today. As usual, I'm not even scratching the surface with all the information that can be presented, but I want to give it to you guys in doses. It can be a lot of info, and it can be overwhelming, especially if you are not an adjuster, if you don't understand this type of stuff. Even sometimes for me, going through all this stuff can be overwhelming. So I like to give it to you guys in little small chunks. And if you guys have any specific questions, you know, I'm more than happy to answer. So yeah, I'm gonna have more insurance content coming in the future, just trying to put together some items. And then also I do take into consideration you guys suggestions. So if you have any suggestions or anything that you want to know, feel free to leave it in the comments below. If you like this video, definitely go on ahead and click the like button, and be sure to turn on your notifications if you haven't already. You don't miss anything from me, but that would also require you to subscribe. So if you haven't done that, do that first, then click the notification bell. But anyway, yes, That is all. And you guys have an amazing day. And I'll see you next time.
You in the past, I'm in the future. You mad, they don't salute you. I need a bag, size is super. They turned your back, it's like I never knew you.